Good afternoon, everyone. This is Rajendran here joining from Market Calls, and welcome everyone to Option Hydra live training room. So, we've been seeing the chop in the markets. The markets are chopping out since the morning, right? So, I guess you people would have been agreed now at least that trading in the morning is a pretty bad idea, especially in a low trading volume. But a little bit of green shoots are coming in. The thing is that at this point of time, we are seeing an peacock rejection, which we've been talking since the morning. That market could have some sort of a mild bullish bias, and at the same time, I also would like to talk about a lot of intraday nuances which came during the day, right? So some of the intraday nuances, like we've been talking about halfback reference levels. There have been multiple halfback reference level I've been able to spot out. So one of the halfback reference level, which we've been keep on talking about, is in the early morning we had seen that the B period is a weaker one, and we also seen that some of the price level, the C period went up exactly from the halfback level. So a lot of trading money started trading on the upside initially, but later on the trading money started down trading on the downside. Like you see that the D period low and E period and G period highs are exactly at the halfback levels, of some other letters. So mostly the one who shorted the markets is also mostly intraday traders, right? So intraday traders, they get themselves short to too short, and moreover, this is a value area over here. Today's value area we call this a developing value area, and the price plunged down below the value area, and what we got is an kind of an this is kind of an trap. This is mostly kind of an trap set by the smart money mostly. So one of the plays where price plunges down below the value area, usually it has the odds of first thing what it could try to do is that price comes to middle of the day, right? So you can see that the point of control is now 7 TPO wide. Almost 7 letters got traded over here. 7 TPO. This is what majority of the days market does that. Yeah, very rarely market goes in a trending mode, but that is not an day-to-day stuff, right? So 70 to 80% of the time market does the sideways activity. So morning also we've been talking about short straddles or short strangles. Probably something like an 12,050 straddles would have been done much better in these kind of cases when you're expecting market to balance majority of the time. And also we talked about directional traders. When it comes to the directional traders, a directional trader mostly they have to look out for these kind of rejections. That's what I've been talking about since the morning. So in that case, they can look for and target towards the center, and again towards the day high. Probably, if possible, it could go beyond that, right? So, but it's natural to have in these kind of markets. It's good to have unlimited expectations in the markets. So far, markets are trading in a 50-point range. 50-point range. So hardly 12,120 on the top, and the bottom roughly around 12,072 levels. So less than 48. So 48 points range. Right. This is not a typical range, by the way, but market can do much better than that. So probably. If somebody is getting long on this side, so somebody has to take a stop. So naturally, a stop can be placed somewhere in this zone, right? So if somebody is trying to initiate a long, so naturally they can keep a stops in this band. Price should not go down below the point of control, so they can keep an tight stops in this band naturally. And at the same time, we also talking about two scenarios over here. One scenario is like kind of an peacock rejection. It's more of a midday POC rejection. Price goes up and it keeps going up throughout the day. The second odds are that markets are dull, boring, so market doesn't try to. It keeps on going sideways. It ends up sideways. Probably it does majority of the time. It does nothing. Mostly it goes in a slow and tight compressed fashion, and it ends up like an intra kind of an inside bar, right? That is the second case I've been thinking about it. Probably I prefer to go with an first case at this point of time, like kind of an POC rejection, and it keeps extending till the day end. and that is a scenario I've been looking out here. Especially if you're a directional trader out there, that is a scenario. And if you are a non-directional trader, you have to be a bit cautious out there, because these are the places a trend could emerge. Because a lot of choppiness. Think about the choppiness over here. Letter A period, initially it was like this. They came back to the center. Again, B period, activity happened at the center. C period, activity happened at the center. And then C, D, and E, and F, it started breaking down. G, it broken down, and then it got back. Choppiness, again, a lot of choppiness was there. You can see that amount of choppiness. It's pretty easy to visualize from the form of profile. But if you are watching an market profile distribution, it's a quite calm day. Probably majority of the time you would have been watching the markets doing nothing, and rest of the markets you will be start focusing on the nuances and the trading opportunities, right? So the trading opportunity here is like the peacock rejection. That's one of the trade setup. Similarly, we'll be talking about a lot of trade setups throughout the day. At the same time, we're also thinking about if the effort made by the buyers are not going to be enough, most likely it could even end up like an inside bar. So in this case, a trader has to come up with a limited mindset, not thinking too much. Can the market deliver? Yes, market can deliver. The odds are possible there on the upper side, but at this point of time, it's good to have an limited set of view at this point of time, right? So maybe if you're targeting something looks like an achievable target, what is achievable in this market, what is achievable in this kind of market environment, in this volatility, just think about for a moment, and then think what you can just type it out. What is an achievable target? You can just type it out. What do you think? What could be an achievable target on the upper side? You can just type your number, whatever the number comes to your mind. Previous day high, all right. 12120, all right. So at this point of time, are there any negative setups are there? As I said, negative setups are possible only if the price is going to break. Bare minimum, it has to go and break this single print zones, right? So, but still more activity has been already happened over there. Even if there is any downside also, it will have a limited downside effect. So, but majority of the time, price started balancing in this band. So point of control cannot migrate throughout the day. So most likely price is going to develop in this band, right? So point of control cannot migrate at all. If at all possible, only price can migrate. And I also recorded the things in the sheet, right? So, oops, I'm sorry. Also recorded in the sheet. So here are the sheet, right? So when the G period was running in, I thought about this, the possible midday POC rejection. When the price started going down below the valley area low, I talked about this. And at this point of time, my comment is that point of control cannot migrate. Point of control is 7 TPO wide. That means some late reactions are possible in the markets. Some late price action reactions are always possible in this kind of markets. So one thing is that price maintaining above PPOC is a good activity. So price keep on holding above PPOC is good thing. But what I don't like is that, think about this price action here. Only the letter I, it's just one TPO difference over here. So which could keep the markets in tight for quite some time. Maybe again one more whipsaw around and keep on moving above. It could bring some potential activity on the upper side. So at this point of time, nothing much is happening. Probably some more balancing here. Still, I guess volumes are not picked up for the day. If you look into the volumes, today volumes are less trustable. I'll tell you why. Because if you pull up the volume charts, let me divide the volume by 75. Some of the volumes can be rollover volumes also, because rollovers are going to happen since the expiry is nearing, and hardly we have little more than a day. So you can see only one this place, some 8,000 lots got traded, mostly sideways market. I guess mostly rollover volumes started kicking in. I guess these bigger volumes are mostly because of the rollovers. And probably tomorrow onwards, rollover will be predominantly there in the markets. So majority of the day, markets has been completely trading in a sideways mode. It was a slow and steady volume. You see the price drop coming in. This is what I'm showing is a 5-minute charts. 5-minute charts, you might be seeing the slow, tight, compressed activity. These kind of activity with this kind of compression is happening, and volumes are totally running dry. That means we've been dealing with more and more weaker hand traders. So when we are dealing with more and more weaker hand traders, most likely these kind of sell-offs are mostly kind of a low volatile sell-off, ultra low volatile sell-off. These kind of ultra low volatile sell-offs are mostly done by the intraday trading community, especially with this sort of lower volumes, right? So lower volumes, and at the same time, if you look at the sheet which I had shown, you can see a lot of intra-day weaker reference levels. We call this as a nuances, which explains what kind of traders we are dealing with. So D period high, I had a half back. F period high, F period low, we got at the half back. E period low is at the half back. So day is totally controlled by the trading money. This was my comment around 12 o'clock. So that means still you have to wait. And then 12:30, when the day low got broken, by that time I started looking for an PPOC rejection setup. By that time, again, D period high and G period high was at the half back levels. Again, these kind of more and more crowded trading activity happened in this day. Intraday buyers also competed, intraday sellers also competed. Right? Initially, the auction is controlled by the intraday buyers, which is followed by the intraday sellers. And now probably what you are seeing is a kind of a PPOC rejection. And only time has to confirm that are we right or not. Right? So what we can do is we can just only initiate a position, and we can continue monitoring the position over here. So these zones are probably kind of in tight zones for the supports. So, but the people who don't have an idea about it, so what they could be doing here is that they might be initially they thought of going short, and then now they might be thinking about long, and again they might be thinking about short, rather than keep on having that kind of whipsaw mind, right? So rather focusing on the price distribution, it gets you a fair idea what could possibly happen and why it should happen, right? So the value area, this is where the value area has been built for the day, which is mostly overlapping with the previous day's value area. So still nothing has been changed from the yesterday's context. Yesterday's context is nothing much, which is also matching with the bullish context. So 25th of November, we had a bullish context. And then yesterday, they failed to take the all-time high. All-time high was around 118 levels. So we also taken which is also a previous swing high. Let me also put a reference level saying that 118, right? So 118 is the previous swing high. Let me give a different color to that. Morning also we had a failure at those levels. Price opened around all-time high, previous all-time high, and it marginally broken. Yesterday also the same thing happened. Yesterday they broken the all-time high, but then throughout the day they started sliding down. Same thing happened today as well, but then today's slide is not much of a bigger difference, but just still it is keep on oscillating above the prominent point of control. And we're also talking about this I letter. The I letter is weaker, so means a bit of a dip, and then a bounce could be coming in over here. The J period also kind of getting weaker. So now these are the places are mostly dominated by the trading money. Again, only trading money dominance is there throughout the day. Majorly the trading money is dominating. But what is good thing is that as long as they are maintaining this activity above this prominent point of control, the bullish bias remains for the day. Still not so good effort from the buyers also, still not so good effort from the sellers also. Point of control is almost 8 TPO wide. Let me also register that in my Excel. At the same time, I and J period lows also not a good low because it is just 1 TPO away from the prominent point of control, which is kind of a weaker reference. And you can see that still the letter D is at the halfback, which is a weaker reference. And letter J is at the halfback, which is a weaker reference. And I and J are weaker references. That means totally we are still dealing with trading money for the day. So let me put that notes. So point, still we are watching this prominent point of control. Nothing has been changed. Still there is no confidence at all. And my uh, notification is that point of control is 8 wide. So POC cannot migrate. And at the same time, what are the things I'm seeing? The D period high at halfback. I'm also seeing J period high as halfback, J period high at halfback, and also seeing that probably the period like I and J period low, 1 TPO away from POC, which is also weaker. So a lot of weaker references are clearly present. So as long as the price is holding up above the prominent point of control, it's a good sentiment, but something like this can be anticipated. It can be anticipated because I and J are exactly a weaker references, just 1 TP away from the prominent point of control. In the morning also we had a similar setup. You can see that letter E, they came exactly at the prominent point of control, which is a weaker reference. And then it got a bounce back, and then which is followed by a cut. And now we got a jump. When we jumped up, the I and J also can see that it's just a 1 TPO away from the PPOC levels. So mostly a weaker reference for the day. All right, J is coming down, bit down, which is anticipated. It has to come and clear at least minimum 2 ticks. It has to come down. Then it will not be considered as a weaker at all. Right. So, all right, now it is no more a weaker reference. Now, if the price is pulling back up from here, now that will be considered as an pretty much interesting trading opportunity here. Now, these are the places you can look for a very low risk trade setups, right? If you're wrong, you're wrong. That's it. You move on to the next trade because you've been waiting so long for the day, and then one of the good plays you're trying to find an opportunity over here. So now this J period low, it clears those weaker references, and it started pulling back up, which is a good thing. Now throughout the day, price has to stay above this prominent point of control, and that is where is very much required for the price to go towards probably this center, and then towards the day high. Probably that could be a reasonable target for the day. Anything if it is there anything on the upper side. See that the J period is also weaker and D period is also weaker. So a lot of weaker references out there. So I'm going to say like the letter I and J, weaker references, which we discussed over here. It got a clear. That's a weaker reference. And still we have what is remaining is the letter D and J period high at the halfback is a weaker reference that is remaining out there. Still, markets are so far balancing and frustrating most of the traders, not doing anything by keeping on in a tight range. Most of the traders, they hate this, especially the traders who are part-time traders. They are getting into the trade and then they are seeing this kind of compressed price activity. They feel the heat that nothing is happening. Probably they're not losing also, they're not gaining anything also, but time wise a lot of frustration is going on in today's session. But it's a good learning thing that these kinds of things used to happen many times, right? There are certain phases, it keeps on happening every day. Like during 2014 it was pretty much common. Almost every day market used to do like this, and then most of the price action came in the form of a gaps, or all in a sudden a surprise move comes and then nothing happens. Remainder of the day again market started grinding. So far markets are grinding down, but still no effort neither from the buyers nor from sellers at this point of time. So these are the places option writers, they take most of the money from the option buyers. So as an option buyer, you have to be a bit smart here. You see some good move, try to make some profit out of it, because that's the reasonable expectation a trader can come in these kind of market environments. So and let's have a quick check around what Bank Nifty is trying to do. So Bank Nifty is also mostly balancing around previous day high. Majorly nothing was happening around. So probably tomorrow could be an excitement day. So I guess tomorrow should be an some exciting move could be in the offing. At least last Thursday, right? So last Thursday, nothing, not much of a price action movement, but maybe tomorrow something interesting could be happening out there. Could be a bit of volatile day. Maybe option writers, especially the weekly option buyers, are gonna like it. That's the kind of price action move it is setting up. You know what? As a full-time trader, watching these kind of price action during the middle of the day could be painful, but one have to get used to those kinds of things. If you are always looking for an excitement, then markets are not the place. Especially if we are going to be a full-time trader, market doesn't excite every day, right? So there are places market will be dull, boring, compressed, and you have to learn to understand those phases and adjust your trades accordingly. Yes, time is 13:55. Probably another 20 minutes. We'll be starting up with K period. So far, nothing much. If markets keep on grinding like this, maybe it could even end up like an inside bar. But 50-point range is a very compressed range. So maybe I guess some sort of activity should be happening post 2:30 or post 2 o'clock at least. So far, no activity in the markets. But if you're looking into from the broader perspective, so I guess predominantly most of the sectors are still trading green, and yes, probably let me reload. Nothing much. Predominantly, most of the sectors are green, and the markets are marginally up by. It is up by 32 points, whereas here, because of the premium effect, market was trading marginally down. So these are the places scalpers will enjoy a lot, because they might be keep on getting a lot of opportunities to get in, get out, get in, get out, get in, get out. But from an intraday player, you have to be really cautious about where you're entering over there. Still struggling around the peacock levels. Looking from the volume perspective, not much of an activity yet. Let's have a quick check around what Bank Nifty is trying to do. Nothing much. Just keep on multiple whipsaws around previous day high. Almost there was a failed breakout at the day high, also day low also. So too much of failed breakouts happened over here. Early morning breakouts has been got failed multiple times, whereas Nifty is moving in a completely different fashion. Nifty is slowly dragged down. So if the auction is mostly done by the intraday players, they might be keeping their stops mostly around. Most of the traders might be keep on taking a stops around over the H period high, and probably around the day high and the previous day high. So now those are the places the traders might be keeping their stop loss, and mostly if most of them are intraday players, right? If it is smart money will be trying to defend those peacock levels. How do we know that we are who are competing are mostly intraday sellers? They are mostly intraday sellers because the D period high and J period high are mostly at the halfback levels. So more and more intraday trading activity is happening out there. So when more and more intraday trading activity is happening, then it's a good place to estimate where most likely those intraday players might be keeping their stop loss. They might be mostly keeping around day high or 2-day high. So these are the places a trader has to come up with realistic targets. If somebody don't have a realistic target, then probably uh, those are the guy who will be beaten up in the markets again and again repeatedly. Nothing much. So the point of control is 8 TPO wide. Nothing much to say, that remains the same. Okay. So probably at this point of time, these I and J have weaker references got a clear. So these are the things I'm carry forwarding. And at the same time, stops could be built around today high and the previous day high. We are thinking about this because today we are dealing with more and more intraday players, right? So intraday players and in trading money. So if there is any stop hunting, probably these are likely targets to achieve on the upper side, initially towards today high and then later probably towards the previous day high. So, and moreover, if there is any drop coming in, that reduces the odds of upside. So, if there is any drop coming in, that could reduces the odds of downside. So, in that case, it's good to have an stops in this band. So, we've been talking about keeping a stops in this band, right? So, in that case, if you're wrong, you're wrong. One have to learn to step away from the game, and then later on doing nothing. Because we have been talking about and kind of an tight stop zones, kind of an 10 points or 15 point stops from here. And let me also pull up that 12,050 straddle. Let's see how that straddle performed. So I have a chart over here which tracks the activity of option spreads. So I'm going to pull up 12,050 piece. So 12,050 call and put to check how the straddles are performing. I also have to add the symbol. I guess more or less I have to close and reopen because I haven't. It's been 3 days. I haven't closed my charts. So let's have, what if somebody would have shorted the short straddle in the morning, that especially the 12,050 straddle. What would have happened? Should be updating by any moment now. Just the data is getting loaded. So whatever the data is getting loaded, it will be there in the data manager. If you're using an AMI broker, you have a separate data manager for AMI broker, whereas if you're using in Ninja Trader, probably you'll be having a separate data manager for Ninja Trader. Still twice they failed to take out the previous swing high. Not much of a confidence. Earlier, yesterday also not a confidence setup. Yesterday was a fantastic opportunity to short at the open. Or at least we can check the spreads. This is the morning spreads, right? So the spread, the total spread was 106 was the total spread. And probably if I try to update now, if I try to refresh, yeah, probably now the spreads roughly around 70. So that means 30-point erosion there in this kind of sideways market. This kind of sideways market, somebody would have gained 30 points of Nifty from this short straddle setup. Right. So if you're a directional trader, as I said, you have to learn to wait. That opportunity came probably around 1 o'clock. And a lot of whipsaws around the point of control, and still price managing to trade around that. So now we can see that the J period is again still at the half back levels. J period high, watch out that. Still at the half back. At least price started slightly started coming above the PPOC, kind of a bit of a cushion for the buyers. That releases some pressure on the buyers at this point of time. But still, some the effort has to be there from the buyers. Still, not much of an effort yet. But both these kind of efforts will be mostly coming in the second half, mostly after 215 or 230 onwards. The effort will be coming up by doing a kind of a stop hunting. So price is trading around the today's point of control. So far rejected the yesterday's prominent point of control. Not much of a decision yet from the buyers. Request to share AMI broker straddle AFL. You can just Google out. You'll be able to get those things. All those things are in the public domain. So AMI broker straddle and strangle AFL. You just type it out. You should be able to reach my website. So straddle and strangle option spread. So there you can get it. which you can use it to construct the spreads. All right, nothing much. Still really not happening anything still there. So these kind of point of control days, especially with a tighter range setups, so these kind of days, mostly option writers make most of the money out of it, because directional traders will be expecting a trend, and then a trend that doesn't comes throughout the day. Most of the day, the trend doesn't comes. It looks like a trend, and then it doesn't. Most of the time, price spent in balancing. At this point of time, what I'm thinking, um, price staying above the PPOC is a bullish setup. That is what I'm thinking over here at this point of time. Nothing much to think beyond that. Limited expectations in the markets. Maybe test of a day high, or probably in a very best case test of an something like 12140. That could be the target two. Right? Target one is 12120, and probably target two is 12140 from a directional perspective. Maybe since I had seen more of intraday trading activity, most of them are intraday sellers. I'm thinking that probably the stop hunting could happen against those intraday players in the second half. And at times, these kind of stop hunting can happen during middle of the day. So, but at around 2:15, there are so far not much of a buyers also, sellers also. A bit frustrating, but yeah, that is what market is all about. Still, this J period highs at the halfback, and D period highs at the halfback levels. So J and D, still mostly sellers, short traders. They are selling middle of the day. So J period started. It will be running from 2:15 to 2:45. J period also at the halfback. You can see that. I mean, K period is also at the halfback. The K period is at exactly at these levels. K period high is exactly at the halfback of letter H. Period halfback. So means still the prices keep on oscillating back and forth around the prominent point of control. with too many intraday traders coming and participating at a D period high, J period high, and K period high. So too many intraday presence is there in today's session. So these kind of auction could be totally frustrating almost all kind of traders, right from intraday players, right from positional traders. It could be mostly frustrating because markets are not majorly doing anything for the day. Who could be enjoying here is the scalpers would be enjoying here because they love this kind of calm and slow and steady and predictable markets. Like price goes up, again it goes away from the value area, goes away from the point of control, it comes back to that place. Again it deviates from that level, come back to that level. So repeatedly the point of control started building, it's getting widened horizontally throughout the day. So scalper would have been loving these kind of markets. Scalpers, option writers. But if you want to be an intraday trader over here, one have to be aiming for some 30 points or 20 points, nothing much beyond that. Or probably if you're looking for a stop hunting like me, max to max, you can expect some sort of 50 points from here. All right, got back down below the peacock, and once again they are back above the prominent point of control levels. So time is almost about to get 2:30. And what is the point of control over here? Point of control is almost 4, 5, 6, 7, 8, 9. Right, one more letter, probably it could become an prominent point of control, which means almost 10 TPOs. So what I'm thinking at this point of time here is that if it is going to become a prominent point of control, right? So then mostly we have to look for an 3 to 3.5. We have to look for any positive development. So probably the stop hunting has to come. If it is not coming in, most likely it could end up in a sideways balanced price action, maybe, and stop price could be coming in, not much of an upside, right? So most likely in that case, look for a limited trade setup, book some partial profits over here, trail it towards the rest. That is the kind of approach a trader has to take over here. Because hardly we have another 70 minutes left in the markets. And odds of prominent point of control is getting increased. Almost TPO is 9 wide now. Auction is still bullish as they are still maintaining above that peacock. Even the H period went 2 ticks down below that, so which is a good low. I mean, the K period low is a good low. But too many intraday traders, they came and participated. So still J and K share exactly the same highs. You can see that, and still K is at the half back levels. I mean, still weaker traders are there in the game. Mostly sellers, intraday sellers are there in the game. They come at such kind of visual reference levels. If you understand scalpers in these kind of markets will be, they may be playing mostly for 7 points, 10 points kind of game. That is the maximum they can play, right? So because the entire day range itself only 50-point range. And volatility in the markets also drastically reduced. At least last 2 days it has been much better. I guess we can take a couple of questions here. There is a question from Prakash Hari. Can you explain more on premium to discount? The premium or discount is mostly measured in futures. I guess if you're talking about the futures and futures discount or futures premium, right? Mostly it is measured in relative to the underlying spot price. If futures are trading above that, then we consider as a premium. If future price is trading down below the spot price, then we consider as a discount. So yesterday it went, Nifty futures went into a 40 points premium. Maybe these kind of things, all in a sudden markets get into these kind of premiums. Primarily markets are expecting something in the market, maybe some news announcements, like the flow test. Maybe that could be one of the reason. They could have been entered into that kind of premium. Even market profile code is also there on Google, I think. If you find that, then definitely go and use it out. There's no harm in doing that. Any questions, you can please post it on the Q&A section where I can take questions here. So any surprise auction, it has to come. Most likely it has to happen around 2:30 or 3 o'clock. A late stop hunting, we call that. And at the same time, prominent point of control odds are getting increased. And definitely, Bank Nifty tomorrow's auction is worth watching because some fireworks might be coming in. I'm not sure about it, but either way, some decent trending activity could be coming in tomorrow's session. At this point of time, I can only speculate, but tomorrow we can actually go and play those kind of references. Right. So at least last week expiry was not volatile. Probably tomorrow, I guess it should be volatile. And last option Hydra also we had on Wednesday. We said that probably the odds of Thursday expiry is going to be less volatile. That's what our last guess. And I guess this time I'm thinking that this could be bringing some good opportunity for the weekly option buyers, especially in Bank Nifty. That's what I'm thinking here at this point of time. So still K period is at the halfback, J period halfback got a clear, and K period halfback is there, D period halfback is there. So these are the two halfback levels are there at this point of time. And the stop loss remains at the same. The stop loss here is more or less at this level. If it is breached, traders has to step away from that game, not playing anything for the rest of the day. Right, the K period halfback has been cleared, and the price is nearing D period halfback as well. Probably some excitement there in the markets. Probably that could have been excited most of the participants. Again, still K period is at the half back levels. You can see that it's exactly at the half back of letter C period. Still, it is a weaker reference. This is a weaker reference. D is a weaker reference still. So these are the places a trader has to book some partial profits, take something out of it. Let it be some 15 points or 20 points, take out and then trail the rest of the activity. So that's how a trader has to prepare, because the market itself so far frustrating. Yeah, stops are there, but despite that stops, at times market can still get into a sideways mode. So take something, what you made here, take something out of the table here. Right? That's the ideal way to think in this kind of markets, because so far markets are frustrating. But still, price maintaining above the peacock is so far a good setup. Yeah, it was a bit scary when the price mildly dropped down below the peacock, and especially at the INJ period where the lows are not a bit of a clear one. Still, that mild bullish bias is the only thing here. I'm not anticipating much. Any upside stop hunting are mostly limited to stop hunting in these bands. So most likely stop hunting in this bands is that's the maximum bias one can come up with. So I guess only but wherever the trading money came, every trading money levels got taken out. That is the beauty of today's activity. Rarely one or two might be left out in some of the days, but today's activity, wherever everything, too much of weakness we'll be able to spot out. Look at the sheet over here, too much of weakness over here. So whatever the reference level we marked, all those reference level got a clear, and we've been able to manage our expectations as well. Like, so we had a mild bullish bias. Despite that, we had said that we had to wait for the trade setup, and then around 1 o'clock we had the setup, right around possible midday peacock rejection setup. That is a setup got played today. But not every time, same setup will be getting played. Some other day, tomorrow, some other setup will be getting played, and day after tomorrow, some other setups. So by doing so, you will try to able to handle any kind of trading days by keep a track record of these kind of information. These kind of track record of information helps you to understand the markets even much better, right? So that is what a trading journal is all about. These kind of trading journals are very much required, and you have to save this on day-to-day basis. Probably in option Hydra, I'll be sharing a bit of elaborated setup. This is more of a live sheet which we used to prepare. Similar sheet we'll be having for an pre-analysis as well. Pre-analysis we'll be having a setup. So where I'll be sharing during the option Hydra session. So where we'll be preparing for the pre-analysis and live analysis, we'll be keep on recording those information. All right, so I guess pretty close to the letter D. Letter D also taken out. So I'm gonna say that so J and D weaker high, half back, got a clear, and so nothing much. It's still a no confidence day only so far, but just those weaker reference levels got a clear, And next thing to watch out is stop that built around. So let me put a different color over here. Right. So these are the reference level we've been watching out. So maybe I'll give some mild colors. All right. So these are the levels we're going to watch out for the day. Let me also share the sheet in the Slack as well. And so kindly put your feedbacks over here in Twitter. So I'm available in Twitter. So I want you people to, if you try to got some knowledge out of this, or at least some a tiny bit of information out of this, you think that you learned something valuable in today's session, you can go down to my link, market calls, twitter.com/market calls underscore. Probably you can comment it. So let me put in the chat. So here is the link. All right. So you can, whatever you felt about the session, you just go back and you can comment below this video. So the morning video I had uploaded over here. And I guess you people also would be getting an access to those links as well. So maybe I'll share this Twitter handle. If you thought you learned something out of it, you go and put your comments over here. That'll be mostly helpful to understand that you got the things right. All right, so let me have a quick view before closing down the session. So nothing much. So some stops has been hunted down. So remainder of the day, I'm not sure about it, but yes, odds are there that if any stops are there, the stops could be mostly in this band. So if you're seeing that price is mostly shooting up faster, that could be the odds of stop hunting. And there is also a possibility that price could mostly rotate back and become one more prominent point of control day. So a mild rotation or probably an upside is what I'm thinking at this point of time, right? So no negative setups at this point of time. Anywhere I'm not seeing any negative setups. And so far it's mostly auction is mostly sideways to bullish auction is what I'm expecting in the remainder of the next 1 hour. Thank you, and hope I'll be you'll be giving me an good reviews about in the Twitter handle, and make sure that you're giving it, so that motivates me to do a lot of webinars in the future as well. Thank you.